Okay, guys, welcome back to part two. This is the chart that we was working, same chart we was working on in part one. So today what we're going to do is talk about how to locate your entry on the chart that you've already marked. So you already have your chart marked up. It's ready to go. Now, how do you enter? Where do you enter at? Okay, if you stick with the fundamentals and stick with the basic entry strategies and simple rules, you'll find yourself having more success. If you have patience, then price action is the best way to go. Because you can truly just see the move, but it does take a little patience, okay? So this is the best approach, in my opinion, for a beginner to start trading. All right, so there is one rule to this, right? There is one basic rule, and that rule is very simple. No retest, no entry. Okay, I'm going to say it again. One rule, no retest, no entry. And I'm going to show you what I mean by that for all of the newbies out there, okay? Very simple. We've already identified our zones, okay? So if we look here, right, we've identified where our engulfing candle is. That's why it's boxed up here in the red. This is a bearish engulfing candle, okay? It's engulfing the bullish candle to the left of it. No retest, no entry. What we're looking for entry from the zone is for this engulfing candle to break out as it did, which is why it's considered an engulfing candle, because price closed way below the bullish candle. So now what do we have to do? We've identified our area, we've identified our zone. We want to wait for a retest to the zone. So a retest is when it comes down, it broke out, and then it comes back up and tests this zone. And what it's trying to do is to make sure that there's no more orders being accumulated up in this area. Okay, so it retested, came back up, picked up a lot of these orders that were here or that are here, and then said, okay, we got everything up here. Let's go the other direction. Okay, so it started to take off and come the other direction. But notice it retested. It retested this level here, right? And then it came back, it retested another level. Look, identified here. And it kept doing that until it dwindled out, and now you have a true start of a breakout. Okay? Now, it's that simple. So you want to wait until you see that move occur. You want to wait till you see that breakout and that retest. Once it retests, you are placing your limit order right at price here, which is about 138,600, which is also a strong level of support and resistance. Okay, so we're right here at price is where you want to put your sell limit. So when it breaks out, comes back up, it picks you up kind of like a boomerang effect, and then it takes you with it with price. And notice how it drops. Okay. Now, so that's your first entry point when you're breaking out of a zone, when you see that break. But what if you don't? And how far do you go? Like if where do you take profit at? I just showed you where you can enter, but let's talk about where you take profit. I identify my take profit really simply with this strategy and this method of a measured move. Okay, you'll see, and as you advance in trading, you'll hear a lot more about measured moves. And to get a measured move, I focus on a risk to reward ratio of about 1 to 2. Okay, that's a nice, safe. Sometimes you might want to go, if you want to play it a little safer, you could do a 1 to 1. But I go 1 to 2. That's the goal, is 1 to 2. You don't want to just kind of break even or just that break even. I want to see some increase, right? And when you're coming off of a zone, say the supply zone, this is the way that I measure it. So this is already boxed up, correct? You just right click and clone. Cloned in the wrong direction, so we're just going to drag this here and drag it down and place it right at the breakout, right line to line. Now, notice something, and it doesn't always happen like this, but notice how this 1 to 1 risk reward measured move comes right to your next level of support and resistance. So right here at this level, if you're going to do a 1 to 1, this would be your take profit. So you just go to the right and you put in the price that you see there, okay? But I said I do a 1 to 2, so let's do that one more time. We're going to clone it one more time and drag it down and put it right below there. Yeah, try to get, okay, there we go. All right, so this is 1 to 2. So I would take my profit right here. Notice as it came down, you did get a pullback here, a pretty big pullback, but before it did that, it came all the way down to here and wicked. So this would have been a very successful trade, no matter what lot size you have on it. A winning trade is a winning trade, and that's more profit and equity that you've built, than what you started with. So that's a win-win, guys. Really simple. So that's the technique on a measured move from the supply zone. Measured move, really simple. Okay, so let's take a look down here. We won't do it, but just notice you can do the same thing. If you catch it coming from the demand zone, you just do a measured move. Actually, I will do it real quick. Why not? Uh-oh, I hit copy and not clone. So we want to go here, hit clone, and hit that there. Let's see how this one adds up. Put it right here. Okay, so this one didn't quite come to the support resistance level, but that's okay. But notice it took you right below it got you out right below all of the consolidation. Notice all of this noise right here, okay, of back and forth, jumble, right, is still not sure of which way or what it wants to do. That's where we got out at. And that was actually a really safe place to get out at. But again, I do 1 to 2, so let's just go ahead and see where it would have taken us. Hit clone. This would have taken us right above our support and resistance. Okay, so remember also, something to point out, when we do support and resistance, don't look at it as this being an end all be all. Look at it as being an area of support and resistance. You know, this isn't perfect, right? It may come up a little bit. It may go close to it. It doesn't always necessarily hit this zone as you're marking it up. So we've marked it up based on the past, but in the future, it may not hit that zone. Like take a look over here to the right where price is currently, and you'll see that it didn't quite hit that level, but it came damn close to it. Down here, it didn't quite hit that level, but it came very close to it. So look at it as a area of zone, okay, not necessarily a end all be all. Okay, so I'm going to remove this right now. Let's get some of this out of here. Okay, now, so that's how you enter based off of a measured move and breaking out from the zone. We've covered two. Now, what if you get in a little late? Say if the move, you've missed the breakout and retest, you've missed the measured move, right? So what do you do now? Do you enter right here? Do you enter right here? Absolutely not. You need to wait until you see another high created, okay? Now, what do I mean by that? Never trade in the middle of a zone. Some people might risk it. I do not. Um, in my opinion, that's very dangerous and very risky if you start to say, oh, I missed it, but I didn't miss it by that much. It's only halfway up. And you decide to enter right here, and then it turns around on you, right? And go the opposite direction. You don't want to risk it, right? It's not necessary. Just be patient and wait for the next setup. When do we know when the next setup is? Okay, so it has broken out, it has retested, it has went up, it hit here, right, to this next support resistant zone. We'll call this a support resistant zone. So what I'm looking for to see if I see any engulfing candles. Here is one here, but notice it's in the middle of a zone. We're not entering that because you might catch a couple of pips. You have to let this form, and then it retests, and you might get 2 or 3 pips, right? I'm looking for the big move. I'm not going to waste my time with just 1 or 2 pips. And to be truthful, if you entered this trade, this is British pound JPY, the spread on this, you would have literally got probably about 2 pips. You know, some people, if you're a scalper, maybe that's cool for you. I'm more of an intraday trader, so I'm looking for at least 10 to 30 pips, on a move. I'm not looking to get anything less than about 10 pips. Okay, so here, we still don't see a move, right? We're not going to trade in the zone. We don't know if this is a true uptrend yet because why? Because technically, even though we've drawn this line here, we're looking at the past. So this line wouldn't be here if we've started here because price wouldn't have reached here yet. So you still have to wait. And what we're waiting for is a strong engulfing candle, possibly out of zone, to look for a reversal. So this was an engulfing candle, but it wasn't, we don't know what this is, right? We can't identify this yet. Okay. So it came up to the next level of support and resistance. And we kind of see a reversal taking place here as well. So we have some down movement. It hit the level and it came back down. It broke through our old support and resistance. And look what we have here. So once we have a high, Once we have a high, right, this is the way that we can measure it, a really simple way. We're just going to go up and we're going to take our fibs. We're looking for possibly an uptrend because it came from our zone, right? So that's the first thing that we know. So we're going to start at the bottom at our low, anchor our fibs there, and we're going to pull up here. Now we could have, let's look at this. If we would have entered here, the reason I say that this wouldn't work, or I wouldn't have entered this trade, is because I know it didn't give me enough pullback for me to take the risk. Okay, so I'm looking for this to come to at least 50% or either down to the 382, which is a 62% or 61%, 618 retracement, just the opposite direction. Okay, so we're looking for it to come down to the 382, you know, somewhere in here, maybe even the 236. That would be even more ideal. So that didn't hit any of my rules for entry. Okay, so what do I have to do? I have to wait. Another reason I wouldn't have entered this trade, again, like I mentioned, is because it's in the middle of a zone. So we want to wait. It came up to here. Now let's pull it to up to this particular high and see what we have. We've waited, we've sat on our hands, and now we're coming up to there. And we're going to wait. Okay, so let's see. We just wait in time and let this pan out. And notice where it came. It hit 52%. It hits the 382, right? And like I said, for me, that's ideal. Okay, so I would have had a limit order set right here for a buy limit. It came down, picked me up, and then took off. Okay, and I would have brought it back right back up to where it came from. I wouldn't have went any higher. This is where I would have took my profit. Okay, right here at this zone. I may have, you could bring it to one, you know, it's up to you, but notice how your first target here, notice your first target here, right? Actually, it hit it right on. So that would have been, even if you would have took it here, it would have taken you right to your first target. Okay, so that would have been a winning trade as well. But because of the spread, I take my profits a little sooner. That's why I'm saying I would have taken it here, okay, at the support and resistance level. I wouldn't have waited until I got up to one. Okay, I don't want to risk my equity and equity gained and greed. Okay, so I would have taken it right here. All right. So, I mean, that's kind of it. And then the next thing you would have looked for. So at that point, you know, you have your trend, you have your first touch, which is good, right? So you wait for the first touch to the zone. And that's what we did. It came down to the 382. It took off. Now, what do? This trade is pretty much done. Price is up here somewhere, right? I wouldn't re-enter this trade until it comes back and touch my zone again, right? So you have a retest. Remember our rule, no retest, no entry. So it retested the trend line, which is also on the Fibonacci, the 382, came down, went up. Now we're waiting for another retest, and you could just ride the wave, guys. Just ride the wave. Remember that two touches to the zone, 1, 2 identifies that it's a trend. 3 touches is a confirmation. The 4th touch, you have to wait and sit and figure out what the next move is, because that can potentially be a breakout. So don't trade on the fourth touch for a buy, because it could potentially break the zone, come down, and you have to reanalyze and reassess your move. And we'll save that for another training. But this is really basic, really simple. Again, so I hopefully you found some value in this presentation today. Please like, share, and subscribe. And also, you can reach out to me on other social media platforms, Facebooks, Instagram, at Chef Ron Jenkins. So I hope you found some value. I wish you all a peaceful rest of your day, wherever you're at in the world. And I'll see you on the next training.